Hello, welcome to another talk on money, business, and investing. My name is Jose. I'm the founder and chairman of Master Investor. Welcome to our community. Here, we're going to learn about building wealth. Our mission is to elevate the financial well-being of humanity through high-quality financial educations to build passive income and true wealth. It takes financial literacy to improve our financial IQ. Today's topic is going to be on how to pay zero in taxes. The new rules of money are in favor of the wealthy and not the poor mindset. Remember to turn on the notifications so that we know when we go live or upload a talk that can literally change our finances forever. As long as we're applying what we're learning from real mentors and we have an investment strategy before we embark in any investment, because investing is having a lucrative winning business plan that has an exit strategy. And we measure that exit strategy and the return on investment with facts instead of opinions like majority of people tend to do in the world when it comes to business and investing. Summary: turning regular income into passive income is the secret to increasing our wealth. In fact, we can choose how much tax we can pay by choosing the way we spend and make our money. Go to the cash flow circle's right side to become a super taxpayer. Basically, a person that can literally minimize taxes all the way to zero because we're doing exactly what the government wants us to do. And that's what we're going to learn today. Make sure that we take notes and write down a plan so that we can start investing. We need to ensure that we understand that there are 5 different asset classes that exist for anyone to begin to invest and build true wealth. And those asset classes: number 1, business; number 2, real estate; number 3, crypto; number 4, paper assets; number 5, commodities. They all require financial education. When we visit our website, check out the link in the description. It will take us to our website where we have all of our products in a digital format. We have ebooks and we have digital courses for each ebook that we have written in our community here at Master Investor. As we grow our brand, we're going to release more ebooks and digital courses. Whoever gets in right now will be locked in and grandfathered in for life. In other words, when we add more assets into that digital course, we will never have to pay an additional cost for the assets that we have added after our entry on that specific digital course. And we're going to bring wealthy entrepreneurs, celebrities, and legends to emphasize on each topic of our digital courses to help us understand more about building true wealth. A lot of people think that wealth is measured just with money, and it is not. It's measured with time. We need to figure out our wealth number by understanding how much time can we go without working right now and still be able to thrive with the lifestyle, not by living below our means, but by actually living above our means. Who wants to live below their means anyway? Like majority of people preach out there, in order to become wealthy, you need to live below your means, and that is false. In fact, here in our community, we help our members to understand it's all about expanding and living above our means. It's not about being a frivolous spender when it comes to investing our money. It's about having a strategic plan for every single penny that we control. And that may include debt as well, because money is debt. And we understand that because in 1971, August 15, President Nixon separated the gold standard from the US dollar. From that point forward, money became monopoly money, fiat money, fake money, and just an idea backed up by confidence. In other words, in order to beat inflation, because inflation rises when we print money, the government prints money because that is the way it works after 1971, because the gold standard is not longer backing the US dollar. So from that point forward, the government begins to print money to do what it needs to do to improve the economy. So we can act like the government. We can print money legally and minimize taxes, because since money is created with debt in today's economy, according to the corporate law, all debt is tax-free. We don't pay taxes on debt, and we don't also pay taxes on passive income. We're going to learn that the lowest tax income that exists is passive income. Out of the three types of income that exist, we have earned income, capital gains income, and passive income. The last two comes from investing, and that's what we're going to be focused on passive income specifically. And as we get assets that produce passive income in different asset classes, we will also encounter assets that will only bring us capital gains income. However, true wealth comes from having positive cash flow or passive income coming into our packet. So whenever we're not working, because we have true assets that we are controlling with our companies. Bonus, at the end of today's article, we will discover 5 legal ways to cut our tax bill like a wealthy person. A person might believe that he or she has no control over the tax liability. Taxes must be paid by everyone, right? That's false. The tax code and corporate laws are a package of incentives for those who are a business owner and inside investor. Those people operating on the right side of the cash flow circle. We want to become ultra wealthy due to our cash flow and assets that we control with our companies. Not by working hard for a company, but rather by working to build our own companies, working on our companies, not in our companies. We don't want to be an employee of our own company. We want to make sure that we're delegating and putting the right systems in place with the 8 integrities that makes a successful business so that that business can run on its own and we can do something else. It's all about the total freedom that we create with the assets that we have, because they are real assets that are producing passive income into our pockets. And sometimes we will get capital gains income. Which side of the cash flow circle are we operating today, and which side we want to belong for the rest of our lives? As we witness on our diagram above or on our screen is the cash flow circle, which demonstrates the 4 types of people in the game of money and 2 types of mindset that exist in the world of money, which is the poor mindset and the wealthy mindset. Okay, even if the person is a middle class individual who gets paid a lot of money for majority of people, then that person still has the poor mindset because he or she is still working for money. He or she hasn't figured out how to make money work hard for them by actively investing it. And he or she has to show up to make money. In other words, that type of income is called earned income. And if the person has a private practice as a self-employed individual, then that person will also pay the highest in taxes. On the left side of the cash flow circle, people pay the highest in taxes. As an employee, the person pays about 40% on taxes. Right when they get their paycheck, that those taxes are already taken out, and other things will be taken out of their paycheck. So by the time they receive their paycheck, the employee already has been cutting half on their check. So if they're making $1 million per year, they're going to end up with $500,000 because about half will go to taxes. And there is no room for the employee to minimize taxes because the rules were not created to benefit the people on the left side of the cash flow circle. The self-employed, which is also a person who is on the left side of the cash flow circle, that individual pays about 60% of taxes. And that individual, even though makes more money than many employees, that person is still slave to money, still has to show up to see their clients. And we want to build businesses that are product-based so that we can detach ourselves from our businesses. We don't want to be present selling our products. We want to have systems and videos that don't even have our faces on it to sell our products, and we want other people to sell our products on autopilot because we have a great solution to the marketplace. So it's all about finding the niche that we want to be involved in, finding a need and filling it with the right product, and make sure that we're building a brand out of our businesses. It's not just a commodity that can be replaced by somebody else. And the way we can build the brand out of our businesses by adding intrinsic value, as we have learned here in our community, and business integrity. Intrinsic value means that we are protecting what we do for the market, our products. So if we need a patent, if we need to register our logo, trademark, intellectual property, anything that needs to be protected because that's what we create as a company, then we need to have those legalities in order so no one else can take it away from us. And now that company becomes more valuable. It becomes a brand. And of course, we need to build it to create passive income. It needs to be profitable. We are in business to make cash flow, to make positive cash flow, or also known as passive income, which is taxed at the lowest bracket. So we built a business that gives us that revenue, which is taxed at the lowest bracket, zero. Passive income is taxed at 0% because we can use that revenue to reinvest back into our business and invest in sectors where the government gives us rewards, and we take advantage of those tax advantages that we get provided because we are doing what the government wants us to do. We're working to build passive income and not earn income, which is a very different approach when it comes to making our money. As we can witness on our diagram above, is the cash flow circle, which demonstrates the 4 types of people in the game of money. We have the employee on the left side, we have the self-employed, and on the right side, we have the business owner and inside investor. Wealth is built on the right side of the cash flow circle. And people work for money on the left side of the cash flow circle. And usually an employee or self-employed is hired by somebody on the right side of the cash flow circle. Someone that has a business and an inside investor, we need an attorney, somebody that's a specialist that has maybe their own practice, and we need to use them to navigate the tax code, also to take advantage of real estate law. If we're investing in real estate, we need those specialists in the team that we put together. Our inner circle is very important because we're going to need a team of smart people in order to succeed in business and investing. Business and investing are both team sports. In the 2 types of mindset, on the left side of the cash flow circle, we have the poor mindset. On the right side of the cash flow circle, we have the wealthy mindset. Whether the person is a high-pay employee that earns millions of dollars as a movie star or maybe even as an athlete, that person still has a poor mindset because he or she has not learned how to make money work hard for them, and they haven't figured out how to utilize debt to make money, to make passive income through sound investing. And they haven't figured out how to pay zero in taxes legally. They pay 40% plus taxes every single year because they don't know how to navigate the tax code. They don't have an investment strategy that allows them to minimize those taxes via business expenses that are legal. Become a super taxpayer. As we understand more about money, we can clearly see that the data shows that taxes are the highest expenses that humans have in their life, because majority of people in the world operate from the left side of the cash flow circle, not the right side of the cash flow circle, where we can legally create tax-free wealth. When we position ourselves to lower our taxes by doing business and investing in what the government wants us to invest in and develop, then we instantly get tax advantages. 2 important rules of the wealthy. Here are the wealthy's rules. First rule, because we don't earn our money like an employee or self-employed, the wealthy pay very little in income taxes because we work for the other type of income that exists. Passive income, or also known as positive cash flow. We are aware that producing passive income from the business owner, an inside investor, or the right side of the cash flow circle is the most effective approach to lawfully evade taxes. Second rule, the purpose of tax law is to lower taxes. For instance, the tax code in the United States is more than 5,800 pages long. Raising taxes takes up only about 30 pages, except as otherwise provided in this subtitle. Gross income means all income from whatever source derived. Reads 1 sentence of section 61A. After that, there are very few more pages with tax rates and additional taxes. The entire remaining 5,770 pages are devoted to tax reduction. We will not only permanently lower our taxes by 10 to 40% or more if we follow the government's instructions, but we will also start to accumulate more wealth in cash flow than we ever thought was possible. Paying no taxes at all that's a patriotic thing to do in a capitalist system in the world that we live in today. Government rewards those on the right side of the cash flow circle. What is the government's desire then? The first goal is to increase employment. Who makes jobs? Business owners. As a result, business owners receive a variety of tax benefits that serve as financial aid to promote the creation of jobs. What more is the government looking for? Reasonable price housing. Numerous tax advantages are available to real estate developers and investors, which serve as subsidies to promote the construction of affordable housing. The government provides investors and businesses with all their tax benefits in order to achieve these objectives. By providing particular tax advantages for oil and gas investing, farming, and other agricultural, green energy, and low-income housing, governments further narrow down the kinds of investments and jobs they want the market to generate. Here we can see a diagram of what the government wants us to do. Create more jobs, provide affordable housing. Who creates more jobs and provides affordable housing? Business owners and investor. The government provides the inside investor and business owner with all our tax benefits in order to achieve these objectives. By providing particular tax advantages for oil and gas investing, farming, and other agriculture's green energy and low-income housing, governments further gives us more tax advantages for doing what they want us to do. Changing size of the cash flow circle, fortunately, it is not hard to achieve that. 3 actionable steps. Number 1, become a business owner. All throughout the world, thousands of people own their own businesses or make investments in energy, real estate, businesses, agriculture, and they all benefit from tax code advantages. Number 2, become an active investor or an inside investor, who entails actively investing for passive income rather than earn income. We don't focus on the income column, we focus on the assets column on our financial statement. Majority of people are focused on getting paid a high paying job. They're looking for the next big paycheck. As an inside investor, we don't get paid through a paycheck. We get paid through our businesses and investments, and that type of income is called passive income and sometimes capital gains income. However, specifically, rule number 1 in our community and master investors is that we work to build passive income and multiply money through sound investing. Simply put, passive income is money received from businesses, dividends, and rent of cash flowing assets that we control, compared to earned income, which is derived from an employment or exchanging or selling time for money at a job. Capital gains income comes from appreciation of a valuable investment that we did. So whatever we purchase at the time that we acquired that investment, we sold it for more in the future. Those gains are capital gains income, and they're taxed higher than passive income, although sometimes we can minimize those taxes and defer them forever as long as we follow the law in regards to that particular asset class. In real estate, there are like sections in the laws that allows us to defer taxes when we sell a property and then we roll that over into a new cash flowing asset. However, we need to meet the requirements and we need to talk to our advisors, to our inner circle, to our CPA and our business attorney so that we can ensure that we're meeting all the requisites that are required for us to take advantage of the tax law. Number 3. Before number 3, finding profitable cash flowing investments that provide passive income is essential to become a super taxpayer, an inside investor, someone that learns how to minimize taxes all the way to zero. Because taxes are the highest expenses humans have because they're working for the wrong income. They're working for earned income, which is automatically taxed at the highest bracket. Number 3, learn from an active investor or an inside investor. We're referring to an individual who invests our money directly in the tax favor industries like energy, real estate, business, or agriculture, and others. I know the advantage for inside investors is that we can deduct a large portion of our cost. We can even deduct investment losses from other sources of income if we use the proper tax technique. Make passive income out of earned income. If a person is working for earned income right now or active income, if they're exchanging time for money, then that person needs to have a investment plan so that that earned income can be invested in the right assets and launching a business or investing it in other asset class that will create passive income to the point that it can supplement that earned income and that person no longer has to work at that job to pay for living expenses, and that person has reached financial freedom because he or she is controlling assets that are producing passive income enough to pay for all the living expenses. And now that person begins to build true wealth because all we have to do is compound the assets column with more assets that we control and reinvest in that cash flow that is coming from the assets column back into our assets column through good expenses. Not all expenses are bad, and we are going to have liabilities. The more wealthy we become, the more liabilities we will have because we will have more options to acquire whatever we want. If it's something of luxury that we like to have, we can do it because we have a business that is paying for that luxury, and we can do it over and over again because we're not working hard. The business and investments are working hard for us to produce passive income and capital gains income, which income is used to pay for all of our expenses and liabilities and future investments as well. Many people begin their life working and receiving compensation for the labor. However, lowering our tax rate by turning the earned income into passive income is the secret to increase wealth. We can change our income that we focus on building by having an informed conversation with our accountant, mentors, and tax lawyer about how the various forms of income are taxed, and we can build a strategy that will minimize our taxes completely, all the way to zero, legally. Be a super taxpayer, move into the right side of the cash flow circle and beginning a business or investing for passive income is the greatest method to take advantage of deductible expenses and using as much debt as possible to invest. Even when we have capital, we have to use that capital to raise more capital. And real estate in other areas, in other asset classes, we're going to use debt to invest and to create passive income. And the debt service, the interest and all the cost of that debt will be paid from the revenue of the investment because it's a sound investment, and we calculate the return on investment with facts, not opinions. The person doesn't need to resign from their job right now. However, begin to put a plan together so that we can prioritize becoming wealthy if the person wants to break away from their job and start living a lifestyle of their own without limitations. It's important that we begin modestly and we start taking the first step, which is invest in our financial education, put a plan together, and ask the question, which is going to be the first asset that is going to produce me passive income even while I'm sleeping, right? That's the whole key of having assets, that when we're sleeping, we're still becoming wealthier because those assets are working hard for us. We have websites, we have the right marketing, bringing in sales on autopilot for us. We have sales funnels that are working 24/7 to bring in qualified leads to our businesses. We're growing our list. We're communicating with those lists on autopilot through a sequence of email right from our email autoresponder. We are building our own networks. We're providing value to those networks. We are investing in our self-development and financial education to become better leaders, because we have to lead with strength, courage, and true leadership. We have to bring the best out of our team and others around us, including those customers that we're dealing with on a daily basis. We need to not be the best out of our team per se, but we need to have the best in our team. We need to surround ourselves with smart people and professionals, and it takes a true leader to be able to put smart people to work together. And we develop those skills through ongoing self-development and committed to learning more about money, something new every day that we can use today to improve our bottom line, or also known as our positive cash flow. What is our positive cash flow today? How much money are we making while we're sleeping? And then we need to figure out how much money we need per month on passive income to supplement the earned income. And it starts with a business plan. So our homework is to put down all of our numbers, all of our money on paper on a financial statement. We need to figure out where we are financially today. A lot of people have never read their own personal financial statement. Therefore, they cannot improve it because they don't know where they are financially. We need to figure out how to move that earned income into the assets column. And before we pay anybody else, the first expense on our expenses column should always be investing, because investing will bring that money back and will bring more to the point that we reach infinite return on investment, or also known as IROI, which is the holy grail of investing. That's when we invest into a business or an investment, we recoup our money back, we continue to control the investment and its cash flow, meaning that we continue to collect positive cash flow even more because we have recouped our initial capital back. So now we keep more, and it's literally money for nothing. We are printing money for free because we have none of our money into the deal. And when we invest with debt using other people's money, the bank's money, then we have more leverage to acquire bigger assets because we're combining our capital with debt. And if we can use 100% finance on a deal, then we can do it, because as long as the numbers work and it brings enough revenue to pay for the debt service, the cost, and after we pay for that every single month, we still keep positive cash flow, then that is good debt because it's making us wealthy and it's getting paid on its own from the revenue of the business or asset that we're controlling with that debt. So understanding how to manage debt is very important. And it's also a way to minimize taxes all the way to zero, because debt is tax-free. Actually lowering our taxes by every way possible is a patriotic obligation that we all have. A super taxpayer doesn't pay taxes legally because we are building passive income from our assets column. We constantly move the profits into a new cash flowing asset and obtain new tax advantages, which results in tax-free wealth. Is it difficult to believe? Consider this. The government must genuinely want us to lower our taxes if that is the purpose of 99.5% of the tax code. We will understand that we have the right to lower our taxes whenever we choose, after we have these two guidelines ingrained in our head. What type of person makes the largest tax payments and why? The wealthy are often criticized for not paying our fair share of taxes. However, if we examine the data, we will see that nearly all of the income taxes collected by the United States government are paid by individuals who are generally regarded as rich or high-paying employees or self-employees that have their own practice, and there could be a doctor, a dentist, lawyer, accountant, etc. The top 10% of U.S. incomes pay nearly 60% of federal income tax, according to this figure from the table that we have on screen. This is due to high-paying employees in different fields and self-employed individuals. So as we can see, the top 1% pay the highest. So the people that are the highest paid employees in any field, the ones that make the most by earned income, those are the ones that will pay the most in taxes. However, things become intriguing when we develop deeper into that 10% of the numbers. To help deconstruct the figures, the Wall Street Journal published a chart that displayed a 2018 analysis by the Tax Policy Center, a non-partisan think tank located in Washington, D.C. Top earners, the top 1% and 0.1% of taxpayers will see their share of income taxes rise in 2018. That's what the diagram shows in here. And we can see that 80 to 90%, they're in the income group of 150,000 to 270,000, 90% to 95%, 270,000 to 310,000, 95% to 99%, 310,000 to 730,000, top 1% above 730,000, and top 0.1% over 3.2 million. And those are the top 0.1%, which are the wealthy people, the ones that are playing on the right side of the cash flow circle, those who own brands and investments and assets that we control, real assets that we have with our companies. We pay zero in taxes a lot of times, but we pay the lowest on the chart. It says 18 to 22% because some businesses, not all businesses can deduct everything from the business. We still have to pay, in some instances, some taxes, but it's the lowest out of all of the taxes. So being a business owner and inside investor puts us in a position to lower our taxes all the way to zero legally. For those in the lower income bracket, net negative income tax is really paid by those earning up to $48,000 annually. They receive their money back. The intriguing part, though, is when we compare the income tax shares paid by the ultra wealthy and the highly paid. According to 2018 prediction, the 0.01% of earnings, those over 3.2 million, were only expected to pay 22% of all income tax, while the top 1%, those over 730,000, were expected to pay 43%. The people who many will consider rich, the top 1% of earnings, the high pay employees, are really paying a lot more in income tax than the ultra wealthy, the top 0.01%, when we consider that the typical earner and the 0.01% makes 26.1 million. Why is this the case? Not making any tax payments. How many of us know someone who avoids paying taxes by cheating on their taxes? Many people out there try to hide money in order to pay lower taxes, but that is illegal, and the person lacks financial education if he or she is doing that. We can avoid paying taxes without cheating and by simply following the law. To be wealthy, we need to play by the rules of the wealthy. In other words, the rules of money are biased against the working and middle class or the poor mindset, and in favor of the ultra wealthy or the wealthy mindset. The ones are on the right side of the cash flow circle. Governments receive between 1/3 and 1/2 of the world's wealth. It is horrible news. Why it counts and who doesn't pay taxes? In actuality, the IRS tax law is designed to promote and incentivize particular kinds of conduct. In general, the IRS encourages people to engage in activities that create jobs and stimulate economic growth. As a result, they provide investors and business owners with numerous tax benefits. However, for those who earn a lot of money but contribute little to the economy in the form of jobs or growth, the IRS is of little use. Therefore, it should come as a no surprise that the top 1% of earners pay a larger proportion of taxes than the top 0.01%. Why? Since the majority of people in the top 1% are neither investors nor business owners. The ultra wealthy, on the other hand, are people whose fortune is frequently derived from professional investing or business startup. Since the IRS rewards these actions, we enjoy far higher tax advantages than even those earning hundreds of thousands of dollars annually. The ultra wealthy are adept at limiting our paid income and generating the majority of our wealth through investments in businesses that generate passive income. Employees are expected to pay roughly 40% in taxes on average. A person will pay a considerably higher tax rate, 60% on average, if a person is a specialist or self-employed. We can lower our tax rate to 20% as a business owner. But here's the trick. We can lower our tax rates to zero if we can become a wealthy entrepreneur and an inside investor. As we combine the revenue that we're getting from our businesses and reinvest it back into other investments that are lucrative, then we can reach tax-free wealth because we're recycling that money. We're investing passive income into more passive income, which literally puts us in the best bracket of all, which is zero legally in taxes. Here are several strategies, for instance, to prevent paying needless taxes. Number one, recognize that our money belongs to us and not the government is important to grasp in our minds. The money we make and the wealth we accumulate belongs to us unless we live under a dictatorship. Yes, we might have to provide a portion to the government in order to support schools, the military, and road construction, but at its core, it is our money. And in a capitalist system, it's created to pay zero in taxes because it empowers the business owner and inside investor. Number two, take advantage of the tax law complexity. For instance, the tax code in the United States is more than 5,800 pages long. Raising taxes takes up about 30 pages. The remainder of the 5,770 pages are dedicated solely to tax reduction. Benefit from it. Number three, include tax planning in our wealth strategy. Keep in mind that our wealth strategy includes both our earnings and our assets. We keep more money and make wiser choices when we invest with using taxes in our advantage. Just like the ultra wealthy, we can pay zero in taxes. The cash flow circle and taxes. Find out who pays the most and who pays the least in taxes is made easier with the Master Investor's Cash Flow Circle. A doctor who works for a business owner with a large organization like a hospital, pharmaceutical company, that doctor could be an employee, for instance. As a self-employed or S in private practice, a doctor can also be a self-employed by having his or her own private practice. Alternatively, a doctor may be a business owner on the right side of the cash flow circle, the owner of a pharmaceutical firm or a hospital. Additionally, the doctor may be an investor as well. And that doctor can create a medicine that can cure millions of people's diseases. And now that doctor becomes an inside investor and a business owner playing on the right side of the cash flow circle. So it's all about the mindset and the approach that we have when it comes to building our wealth and how we make our money. That will determine who we are in the game of money and how wealthy we will become. Why the highest tax payments are made by the employees and self-employed individuals. We can discover who pays the highest taxes by taking another look at the cash flow circle. Once more, the tax code is designed to promote investment in business. For this reason, the highest tax payments are made by people that are employees and self-employed individuals, or those who are on the left side of the cash flow circle. Apart from having children deducting some debt, such as mortgage and college loan interest, and using low-level financial vehicles like a 401k or health saving account, which are actually tax deferments, not savings. There's actually very little that those people can do to lower their tax burden. And those assets that they usually invest in are fake assets because they don't put any money in their pocket. It's only taking money out of their pocket every single month. And the definition of an asset in simple terms is that it's an investment on a business or an investment that we control that puts money into our pocket whenever we're not working right now. And we see that cash flow coming in, is hitting our account. That is the definition of an asset. It has to put money in our pocket. If it takes money out of our pocket only, then it's a liability. However, the IRS laws give those in the right side of the cash flow circle as a business owner and inside investor almost limitless options to lower our tax burden. The IRS regulations are actually designed to encourage activity in the right side of the cash flow circle as a business owner and inside investor. To pay less in taxes, move to the right side of the cash flow circle. Changing from the left side to the right side of the cash flow circle is the key to maximizing our tax bill deductions. And it starts with shifting our mindset to the wealthy one. adopting the context of the wealthy mindset, not just the content, but the context, which is more important. We have to have the right framework on our mindset. We need to adopt the values of the wealthy, how we approach money, what we know about money. Everything that we have been learning here in our community at Master Investor will help us build true wealth. This is not something we can do in a single day. Instead, it is constructed gradually, but the first steps are taken right now. The advantages are lifelong and such that provides us to take the proper actions. We need an investment plan that can guide us to taking the right steps towards building more passive income right now. Not in 10 years from now, not in 5 years from now, not in 6 months from now, right now. Today, we have artificial intelligence and technology that can literally push our products in front of the whole world using smart marketing and systems to bring in unlimited sales, even while we're sleeping. Changing our mindset is the first step in shifting to the right side of the cash flow circle. Spend as much time in studying the new rules of money and also acting on those rules. Implementing them into our lives is important. And network with people on the right side of the cash flow circle. Attend events where we can find business owners and inside investors so that we can learn from them. And learn as much as we can about how money works. Bonus, what are 5 ways to minimize our taxes legally? Be advised that these are advanced methods that call for a deep understanding of finance. While not difficult, they do need for a certain level of financial intelligence. Start a course of study that provides the groundwork for these suggestions if we haven't already made an investment in our financial education. Number 1, start a secondary company to reduce taxes. It is likely that we can launch some kind of business now by using AI and technology. Use our ebooks and e-courses to jumpstart and expand our wealth. Number 2, reduce taxes by educating ourselves about money and business. According to the tax code and corporate law, the following is another way we can deduct taxes legally. We can write off 100% of our business-related seminar expenses, including registration, meals, accommodation, and transportation charges under Internal Revenue Code Section 162. We are not taxed on the advantages since the business body deducts the expenditures and they are not included in our income. Number 3, invest in rental property to reduce taxes. Investing in real estate is among the finest strategies to lower our tax burden. Many individuals who work in the left side of the cash flow circle as an employee but make real estate investments are transferred to the inside investor or the right side of the cash flow circle. We experience significant excess of positive cash flow, passive income, and a significant reduction in tax burden in the process because of the type of income we have, which is passive income and sometimes capital gains income. But an employee can begin to invest as an inside investor. It takes a strategy, an investment plan, because otherwise it wouldn't be investing, it would be gambling if we don't have an investment plan. And we need to make sure that we calculate the return on investment with facts. We need to go through the financial statement and we need to make sure that the numbers work and that we control the cash flow. It's about leverage control and the way the cash flow is flowing in the financial statement. It has to flow into our pocket in order for it to be an asset. Number 4, reduce our tax burden by investing in a gas or oil well. We can make investments in oil and gas ventures today. Transportation, food, warmth, polymers, and fertilizers all depend on oil and natural gas. We can see that oil is used in everything in our kitchen, including the food we consume. Because oil is vital to life, our economy, and our level of living, and because oil drilling is extremely dangerous, the government provides enormous financial incentives. Number 5, reduce taxes by hiring a lawyer and tax counselor. Lastly, business and investment are a team sport, as we used to say here. Our need for expert assistance will increase as we become more adapt and lowering our tax burden to ensure that we are properly positioning ourselves and utilizing the tax code to the fullest extent possible while not breaking any rules and laws. We should have a tax counselor and an attorney we can visit on a frequent basis to ensure that we have the correct strategy and that we're using the proper laws to minimize taxes legally, because we have a plan that clearly details where all the money is being invested and how we deducting that into the right business deduction, because we have a tax strategy in place. Even before we touch the money, we already know where we're going to place the money so that it can minimize taxes and also multiply, because we're going to be using a lot of our cash flow to invest in other investments. So we focus on building a business or investing in a business that produces passive income. We use that money to pay for living expenses. As we grow that income, right, we're supplementing that. But number one expense always, as we touch our money, any type of money, is reinvesting back into our assets column. So number one expense on our expenses column should be investing. Before we pay any bills, before we do anything else with the money, portion of that money should be going into our asset column over and over again. And we need to have a plan, and we need to invest in our team. Hopefully by today's talk, it has encouraged everyone to begin to study more about money, business, and investing, and to play on the right side of the cash flow circle, as it is the only way that we can minimize taxes all the way to zero legally, by playing with the new rules of money. Start investing in high quality financial education by reading our financial books. We have 3 right now. What are the 10 new rules of money? How to build cash flow with the internet, turn passive income on, how to invest in crypto to build wealth. Check out other resources and tools that we have on our website. Our mission is to be the global authentic brand of money, business, and investing that elevates the financial well-being of humanity through high-quality financial education made simple. We look at opportunities to build passive income, win-win partnerships, and true wealth. Let us know if we have any questions whatsoever. We're going to come back and answer them. So just put them below of this talk and go to our website, get our digital courses right now so that we have access to tools and the right roadmap to build true wealth. It's all about understanding how to use knowledge to print money legally for free, money for nothing, reaching infinite return on investment. That's what it's all about. It's about utilizing our financial intelligence to solve financial problems. And the bigger problems we solve, the wealthier we become. So it's about becoming generous, about giving back to the world. It's about solving other people's problems. That's how we become ultra wealthy. However, the first step is to begin to shift our mindset with the right context. And we need to invest in our financial education and self-development every single day. As we learn something new, we apply that strategy into our lives, and then we teach somebody else what we learned so that we can become even better at the craft. Bringing you the good and bad news of money, the business principles that work in all economies. Thank you for having me once again on this amazing talk on money, business, and investing. We will talk next time. Stay extraordinary and wealthy. Bye for now.